Hello from Moted Markets. This is Aura. Will be with you to review the US inflation data and market reaction. This is the first inflation numbers for 2025. The previous numbers from US inflation that we had, they were covering December or other quarter for 2024. During 2005, that numbers that we had, but that's the first number published in 2025, which covers the 2025's inflations as well. With the numbers that we had, they are green in economic calendar. They can be they can be read as a surprise, but in fact, they cannot be the surprise because with the numbers that we had so far in the previous months, with the core CPI inflation being steady, or we can better say it was sticky around 3%, 0.3%, and with the headline inflation sticky around 0.2 and then 0.3%, we could expect higher inflation in these months. That's why I cannot say that was a surprise. If at least for me, it was not a surprise. Core inflation increased by 0.4% on the monthly scale to increase the annual core CPI to 3.3%, up from 3.2% in the previous month, and surprising the 3.1% market expectations. On the headline front, CPI increased by 0.5% in January, much more than 0.3% expectations and higher than 0.4% in previous months. On the annual scale, CPI again increased to 3% after almost 5 months. So we can say that the inflation, these numbers can say that the US inflation is still sticky, and not just a sticky, it's very sticky. And with these numbers, the higher for longer scenario is the main scenario of the Federal Reserve for 2025, and next rate cut is hard to say when it can be. After publishing these numbers, the possibility of holding the current rate increased to 97.5%, up from 95.5%. The data based on the FedWatch tools before data published. As I mentioned, it was 95.5 and now it's 97.7. With these numbers, what we can say, these numbers have to say, these numbers says that the Federal Reserve will hold rates for longer, will hold the rates higher for longer, which is the positive for the US dollar index. Don't forget that in the previous days, in yesterday and today, which has started already, Mr. Powell, in the previous 2 days, Mr. Powell said in the Senate that Fed members or policy members or FOMC members, they are not hurried to cut their rates. So Federal Reserve can hold the rates for longer. And these numbers confirms the comments of the Fed chair and its testimony. In a very expected reaction, US dollar increased right after these numbers published, and now it's trading around about 108. It is up from 107.80 to about 108, almost 108.40, and now generally it's trading around 108.20, 108.30, but that's a positive. With these numbers, we can say that the US dollar at least can hold its gains around 108, and it's a positive for US dollar. As a positive news for US dollar, it was the very first reaction. It was a negative for stock markets, negative for the gold. But as you know, these numbers, inflation numbers, are very negative for the stock market, and we can expect the US dollar to fall under 6,000 levels. We already had the main earnings, and there is no important earnings that can move the markets. That's why with these numbers, these numbers, which means higher for longer, it's negative for stock market, and we can expect the stock markets, not just SP 500 under 6,000. We can expect the Nasdaq under 20,000. We can expect the Dow Jones to fall under 44,000. Generally, these numbers are negative for the stock markets. When it's a negative for the stock markets, why? Because higher rates, which means these numbers means the Federal Reserve will hold the rates for longer. So higher rates will make the debt credits more expensive. So the companies, they are not encouraged, they will not be encouraged to get the credits. So, but that can put the stock markets under pressure, which is a negative for stock markets, and the money is going out. When the money is going out, they are looking for the safe haven. What's the safe haven? US dollar index and the gold. So that's a negative. That's this negative news for the stock market can be positive for gold. At the same time, for the exact same reasons, it's a negative for oil because lower activities in the companies, it means that the less demand for the energy, which is the negative news for energy, and can put the gold oil prices under pressure. So it's a negative for the oil and energy market. We can expect the oil price around $67 and $70 around these numbers for a couple of weeks at least, because these numbers, inflation can means generally the economic activities can be slower, especially we know that after Trump tariffs, we know that already the global economy is under pressure at minimum for the lower for the short terms. We can expect the higher prices around that for the higher prices for the higher inflation, because the initial reaction of tariffs can be the negative for the inflation, so it can hold the inflation higher, which is the negative at the same time for when the inflation is higher, it's a negative for energy market, because higher inflation, more expensive, more money, expensive money, less economic activities, less demand for the energy. So it's a negative for oil and energy. So generally, with these numbers, the tariffs that we had at the same time, we had the news that Mr. Powell, Mr. Trump's, and Mr. Putin, they had a phone talk, and they're talking about the peace talk in Ukraine, which if it happened again, it can be negative for the energy prices, because the peace can increase the export in Russia, which means negative for prices. So generally for the prices, for the energy is negative, for US dollar is positive, for gold is positive, for energy market and stock market is negative, and for the cryptocurrency generally more expensive dollar, when we say that BTC USD, Bitcoin is trading against US dollar, stronger US dollar can put the Bitcoin under pressure. At the same time, these numbers are negative, these higher inflations are negative for more risky markets, which is the cryptocurrencies are one of the most risky numbers. And technically also under 101,000 US dollar, the Bitcoin is generally negative, is bearish, and especially under 94, if it falls under 94,000, we can expect as 86 or 87,000 as the next stop. Generally, it's a negative for cryptocurrencies as well. About the energy, don't forget that earlier today we had also this API weekly report, and the API reported that the more than 9 million barrels increase in the US oil inventories. So generally, these numbers are negative for oil, negative for stock markets, positive for gold, and positive for US dollar index. If you had any other question, don't forget to write down in the comment section. I will try to get back to you as soon as possible. Have a good time. Bye-bye.